take a look at the earnings plays and we'll get this potty going. Morning. What's going on, players, playerettes? All right, let's take a look at some earnings plays. Let's take a look in the market, you know, that fun stuff. Let me dig out this pre-market list here. Is that this watch list? No. Hold on here one sec. Morning, Reef. What's up, Mr. Podell? How you doing? Hey, Mr. Podell. Where? You know, I got a couple new students, some Englishmen. I got to introduce you. I got a couple new students that are Englishmen. Yeah. 2 students that are from London, and then another one that's a Welshman. The Welshman, he's a good dude. All right, let's get to work. We'll chit-chat a little bit here. Morning, everybody. Mr. Bradley, what's going on? How you guys doing? Hey, we got a gap up in the market again. If we look at it, we're running about 1%, 1.5% on the SPY. I think the Dow will open up like 350 points. It's going to take a little bit of the range out of the market, as you guys know. Look at this. Like, I mean, you got CCL up like 7%, 5%. This is like one of the markets where it pays to do a little bit of swing trading because you're going to get all these fucking gaps. Fuckers, right? There's nothing worse than seeing like your watch list, like everything is up 7%. You got to do today, what we got to do, first pull back in the market. We'll try to hit. If it starts to hold at the 920 EMA, we'll be good to good. Sagar, what's up? Suchale. We'll try to hit at the 920 EMA on the QQQs. You can't chase this gap up. Because the reason you can't chase it, you're on day 1, day 2, day 3 of a move. Now, usually if you had a gap up on day 4 of a move, you would try to short it. But it's not. We're not necessarily extended. We're just trending. There's a difference between overbought and extended. All right? There's a difference between overbought and extended. Overbought means like you're up a lot of days in a row and like you're due for a pullback. Extended is like, holy shit, like, you know, we've gone bonkers, right? Or parabolic. So we're just like in what we'd call like the nut grind right now, where you're just kind of grinding your balls every day against sandpaper, but like a soft sandpaper. So it's not necessarily like ruining your balls, but it's slowly decimating them into nothing. And that's where we're kind of at right now. You're just grinding higher a little bit at a time, little bit at a time, little bit at a time. And it just requires a little bit of patience at the open. So today, the market's in that spot where it's too strong to short, but it's like gapping up so much it's hard to long. You know, we're in that just kind of sweet spot of despair. First dip, that's the plan. First dip, 920 EMA, and we'd be good to go. 920 EMA on the QQQ SPY, we see where it holds, then we good to go. Virginia in the house. Yeah. Yatish, what's up, man? Good job yesterday. I saw your message on Facebook. 10 G's. Pretty good. All right, let's take a look at some of these earnings plays, and you can see here we got a couple little nuggets popping around here. Hey Jason, you should have kept that 1,000 shares of TNA, huh? All right. SNDX junk. Yo, so that's like actually a breakout. So when you have like earnings plays, for example, so it's earnings season right now. When you have earnings plays, you can play, you know, this is like what we look for. You know, stock that's like busting out of a big level. The issue on a stock like this is more of like liquidity. Like it normally just doesn't do any. So if it doesn't have that like mega volume that you need, that kind of bigger push that you can't get any size in it. Like, what are you gonna do? Trade like 200 shares of it? Yeah, it's tricky. So pass on that. Let's see, DCPH. Govina, Gayere. Pass. It's a turd. KB Financial. Pass. It's a turd. FFIV. Now this could be actually worth a little goose and a gander. So FFIV's got earnings out. You're starting to come out of range here a little bit. You got more than enough. You got enough shekels on this boy. You're up about 12% in the pre-market, 50,000 volume, so you're right on that kind of sweet spot. I would actually keep this on the list. Now, FFIV, the float on it, even though it's like a $10 billion company, the float on it's only $60 million. So you can actually get like a decent shred on this. I know some of you degenerates only like to trade them small caps, but remember, if the stock's going to move around $10, $20, you know, even if you got 50 shares, 100 shares, you've got more than enough range to, right, ebb and flow and shake and bake and do all that kind of stuff. Good. Yeah, we'll talk about ZM in a hot second. Let me get through some of these earnings plays, and then we'll get into ZM because everybody loves ZM so much. Six Flags. Man. Six Flags. So that is like a really tight pair. First of all, this looks like a swing trade, doesn't it? We were talking about this in the Sunday huddle. You know, like some of these like base breakouts, they all look like swing trades. You know, you got ERI, right? 6. Now the issue is like you would have had to, ideally for the swing trade, you would have entered it. You would have entered it yesterday. But boy, oh boy, like these things got rigged. You know, it's like 1,000 share swing trade, and then we'd be good to go. Yeah, that one looks pretty good. I would keep this bad boy going. I'd keep it on the list for now. Like this thing's got some heat. If you look at it, like it's got some room to go. On the other side of things, on just humanitarian side of things, I mean, is there any other place like more magical than Six Flags and Cedar Point? No, magical places, right? Now, I can't imagine these places are even open this summer, so I wouldn't marry this thing, but I do think you got probably, you know, a few shekels left in this one. The other one is Cedar Point, which is way more fun than Six Flags. Six Flags is nice, right? But Cedar Point is like magical. You know, there's a huge difference in these. This one looks pretty good too. Frankly, the Six Flags chart looks better than Cedar Point, but Cedar Point's more magical place. So there you go. I'm sticking to that. I'd keep this on the list, though. You've got, you know, I wouldn't chase it up 10%, but if you start to see this thing pull back at the open, start to hold around 18, I think this one's good. Like, that's a base breakout pattern. So the definition of a base breakout is stocks that are down 50% or more off its highs that base out for at least 1 month. You build out some type of range, and then when you break over that range, you know, it can start really kind of a multi-week type of run. So like Six Flags is a base breakout setup, right? Because you got the base after the big drop. RCL is a base breakout setup. See this, right? Nice base over here. CCL is a base breakout, right? 50% or more off the highs. You should run this kind of scan once a week in this kind of market. Now, base breakouts in some markets, you don't see them because the market's so strong that everything's at highs. But what you got here, a base breakout. So you want to add something like that. NCLH, base breakout, right? 50% or more off its highs. You got a nice tight base here. All right, That's a base breakout. Pendizzle. You know, Pendizzle. Base breakout. I think the other ones have like a little bit more upside to them. Like this Oxy is setting up for a base breakout, but oil sucks to trade, so I wouldn't even put this on your list. But in general, that looks like a base breakout. Expedia, you know, so these are just like different names like you guys can watch for potential even entries for swings. Base breakout in this kind of market is very, very powerful because of the base breakout is very powerful because of how much down it is and then the range compression. So compression of range is what builds up steam. That pushing the narrowing of volatility of volume inside a range after a big drop is what can build up steam for a secondary, you know, and powerful move. Stocks get their power from consolidation. They get their power from basing. This type of action, like these type of setups, are really, really good. I mean, if that happens, like, you let me know, and I will just reset. You know, it could have been sometimes go to webinar. All this stuff, go to webinar, Zoom, Boom, Microsoft this, Skype this. They all have some lag, but some of them, like, they stick a little bit, and then you got to reset them because they all stink. The only thing that ever works is FaceTime. When your mom FaceTimes you, that thing never breaks down, does it? Right? But this Zoom stuff is amazing because now they're doing like those dick pics, like when people, you're doing a Zoom meeting, you know, and like all of a sudden, like somebody's just like flops their wiener out and you just get Zoom bombed. Like, what the heck is that? Right? Like, what do you got children on this thing? My niece uses Zoom. And I was just thinking, they're like, man, she's like 4 years old. Like, if somebody Zoom bombs her, like, that's going to be fucked. So, don't use Zoom if you're worried about seeing stuff like that. All right, let's talk about the watches. So, those are the base breakouts. I'm sticking to it. All right, let's talk about the rest of the list. You know, JNUG's had a nice consolidation. You may need one more to let this 9 EMA catch up. If you look at the 30-minute chart, though, you're starting to really set a flag here. So you holding this breakout. Now you've got a flag setting up on this about a 30-minute chart. If you start to come out of range on this, this can have some action. You got a red opening on it. Watch this thing for a potential red to green. Good. Next, watch this. I got this W on watch for potential short. All right. Ideally, this thing pops into the 133s, 134s. If you see here, you're like, even your 9 EMAs at 109. So you got 21 points to fall on this bad boy. You ran into some resistance yesterday. You are up 1, 2, 3, 4, 5, 6 days in a row. Yes. This one looks nice. This one looks nice. A lot of you guys are asking about Zoom. Look, Zoom, it's still holding its 9 EMA here on the daily. As long as it's doing that, like it's going to be in a range. You know, it's going to be in a range basically from where the low was from the day the news came out that, I don't know, who, Facebook is doing a Zoom or something. So Facebook's got a Zoom. So since the day the news came out, that was Friday, now like you're just chopping around. So essentially, till this range breaks like one way or another on Zoom, like you're just going to be stuck in there. And there's nothing worse on a stock than when you're stuck at range. You're not at support. You're not at the support to break down or bounce off. And you're not at a breakout or resistance to fade off or breakout. So you're in the middle. And in trading, in the middle there's nothing worse. Ideally, you're sitting on some support or you're at a breakout, right? But if you're in the middle, you're just the penis in between us. That ain't that fun. So just kind of be mindful of that. You know, we all want to trade Zoom because it's fun and it moves around and people talk about it. But like sometimes there's just no trade on it till that range really starts to set up. Then we can go in and do that. Like you can see here, like this range is stress. When you're in a stock that's stuck in a range, it's stress. Like, it's just stress because you think it's a long and then it comes down. And then you think it's a short and then it goes back up. That's the problem when you get stuck inside a range. Like, anything that looks good becomes bad. Anything that looks bad becomes good. Does that make sense? Good. All right, let's take a look and see, like, on the gapper side of things, if there's any ones that are starting to look like shorts. There's a lot of these little guys popping up, but that's just the market is gapping, so you're seeing a lot of stocks, like, individually also look like gappers, but they're not necessarily earnings plays. BPMC's got some news out. Blueprint Medicine says phase, half arrow, trial positive, blah, 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 blah. You know, this could work potentially. Put it on your watch list. Like, biotech stocks and tech stocks, they typically move the best when they have news out. So when you have news out on a stock, in absence of all things, like it's earnings season, you're going to have a lot of different stocks having news out. If you have like 10 stocks that have news out, biotech stocks, tech stocks, they always work the best. You know, if you got 10 stocks, like I always would put the tech and biotech ones on first, and the retail stocks and the bank stocks in the back. I would add this. The big hairy butt on this one is going to be, does it have any liquidity? Meaning, like, normally it just does like a couple million shares a day in volume. Now, you already got 166, so it's possible that we have more than enough liquidity today to trade it. If I don't see like 500,000, 700,000 shares like just fire off at the open, I usually just take it off the list because it won't have the liquidity I need to be able to get in and out freely. There's nothing worse than like having a stock and it looks hot, or it stops looking hot and you can't get out of it. Or you can get out of it, but you can't get out without taking a big haircut or paper cut due to the spread. You know, the widening of the spread can really make things a little bit tricky. So I'm going to add it to the watch list, but the big hairy butt out of it is it's going to have the liquidity. Otherwise, you know, it's a no buenos. Brazil ETF, junk. So these are just all inverse ETFs. You can see all these things are getting long in the tooth. It'd be nice to get just a little bit of a pullback in the markets. You can see like everything's getting, all these indexes are getting a little bit extended. Junk. So these are all just inverse ETFs. There's really no stocks with like bad earnings out per se. The only earnings play that's showing up is this BPMC. Does it really matter, Andrew, if it says positive or negative? Right? It doesn't matter. Yeah, we'll keep it on the watch list. So let's talk about this. Let's finalize, you know, what we want to do. Like, what are the tops, all right? We've got FFIV for earnings. We got BPMC on the downside, all right? I think this AXSM may have a day 2 play in it. The key is going to be like, does it come in and attack this 100? It gapped up a lot yesterday, so it may have just had to rest. I've seen this happen a lot, like when you have like a big gap day, it just has to digest, and then you get a day 2 play. So I've got this on watch for a potential long today into that kind of 110. I won't trade this though if there's a big spread on it. So if there's like a spread that's really like pushing in and it's like $1 or even 50 cents, I won't trade this one because this happens all the time. You know, you end up oversizing a little bit, the spread's just big, and before you know it, like, you're just stuck. Elvis, what's up, baby? The Butler. My baby love me. So I got AXSM, FFIV, PBMC. Now on the short side, I like this W. I do think it's going to have to pop into this kind of 134, 135 area. So that's my, out of the regular stocks, that's my fave. Number 2, man, Spaceballs is looking like it could break out any day. Watch this thing. It needs to kind of push into the 19s before it gets ready, like 1920. If it can remount here, this 50 SMA, that'll be the second time it's kind of run into that. This one has a chance. Spaceballs runs with Tesla usually. It trails though. So Tesla's starting to go bonkers. You can see this thing's already like at $800. Most likely Tesla will be at $1,000 right in the next couple months, the way it's just trending right now. So Spaceballs tends to follow it. I think that, you know, we get a run on Spaceballs. I like this one a lot. We'll be good to go on this one. All right. Then we've got NCLH. This thing is tight right now. You know, if you look at here, there's only a handful of stocks that haven't gone. So when you think about the market, you know, if you can find stocks that like haven't moved, at some point there's a rotation and they start to push into like these kind of names, even though they're going to be turds, they're, you know, like who in reality, except maybe Elvis, is going to go on a Carnival cruise line in the next, you know, year or two. But the setup is there. So keep all these cruise lines on watch. But I do think we probably get possibly another day in these pod stocks, but the gap in them really kind of sucked up some of the range. So that's our list. I'm sticking to it. We're good to go. Guys, there's a big gap, obviously, in the market today, so you've got to make sure to really like kind of let things pull back or set up. We cannot come in just chasing everything, at the open. Either wait for an ORB pattern or wait for that quick pullback pattern, which means, right, you get a push, pull back to the 920 EMA, and then you go. All right, let's go do what we do, which is the do. You know it. Andrew, we got this. How's your day yesterday, brother? Sweet. Yeah, and of course, you know, we always keep the Netflixes and all that fun stuff on the watch list, but we'll be good to go. Elvis, man, you know, you owe me a visit, by the way. It's been a couple years. All right, let's have some fun. Let's go do what we do, which